Thanks for stopping by, everyone. My name is Jeff, and in this video, guys, we are going to talk about a couple of different ways that you can short stocks using Robinhood, okay? And so the most traditional way is buying and selling put options, okay? So I've actually already made a video about that, and I'll also get a card to pop up right here if you would like to go back and watch that first. That is the method that I use most when I'm shorting the markets, or especially when I feel very strong about a stock going down in price. I typically will use put options. There's also a couple of other methods you can use, guys, and we're going to talk about that mostly in this video, okay? So let me introduce you to the world of inverse ETFs. So what these ETFs do, guys, is it's actually shorting the markets, okay? So in typical sense, as the markets go up, these stocks are actually going down in price, okay? Becoming cheaper and cheaper and cheaper. Every time we hit a new high on the S&P 500 or the NASDAQ or Dow Jones, obviously the fact that these are inverse, they're actually decreasing in price. And so over the past 5 to 10 years, these shares have just lost lots and lots and lots of value. Now, we've had the recent volatility in the markets. If you were able to kind of predict that and capitalize on that, you could have actually made quite a bit of money on some of these holdings. So what I'm going to do, guys, I'm just going to go through a few of these, then we'll go over to Robinhood and kind of look at the charts. So up at the top, we have ticker symbol SH, and those are shorting the S&P 500. We have SQQQ, and those are ProShares Ultra Pro short QQQ, which that is actually tracking the NASDAQ, and those are 3 times inverse, okay? You have SDS, that's the ProShares Ultra Short S&P 500. Those are 2 times inverse. PSQ, those are ProShares Short QQQ, and that is a 1 times inverse. Now there's actually a pretty big list of funds on here, guys. Like I said, I can have that included down in the comment section as well if you want to go through and look at this for yourself. Now let's head over to Robinhood. I'm gonna pull up a couple of these ticker symbols. So I just went ahead and pulled up the first one on the list. That was ticker symbol SH. Those are the ProShares Short S&P 500 ETF, okay? Now I have the 1-year chart pulled up, guys. I'm actually going to pull up the 5-year chart so you can see the price is always trending down, obviously, as the S&P 500 is going up. So back in February of 2014, this fund was actually trading around $50 a share, and now 5 years later, it's trading around $28 a share. So lost a lot of value. So you could actually go to a traditional broker and short this ETF, and over the span of time make quite a bit of money. You know, I guess the only thing you would really need to consider there is you better be darn sure that the S&P 500, the indexes, are going to continue to go up, because at any time that they drop, you will likely be getting a margin call depending on how much money you've put into these funds. But none of that really matters on Robinhood. You can just completely forget about that. Let's go back to the 1-year chart. And so right back here in July, of course, August, September, we all remember in October, the markets got extremely volatile for a few months, and it lasted to the first couple weeks of January. So like I said, the S&P 500 is losing value, so this fund is actually gaining value, okay? So you could buy around the $27 to $28 range if you had a notion the markets were going to get hit really hard, and you could sell around 30, or you could have continued to add to this position, and you could have sold here back in December when the market was at its most volatile point. You could have sold around $33. So on a percentage basis, that's not really too impressive. There's actually a fund that I do track a lot closer than this one. I'm gonna pull that up right now, guys. It is ticker symbol SQQQ. And so keep in mind, these are ProShares Ultra Short. The QQQ tracks the NASDAQ index. So if you want the best bang for your buck, you would want to look for the ETFs and the shares that are actually the cheapest. They have the biggest opportunity for a price explosion if the market was to crash, or if we were to get another correction, okay? So this one here, guys, was trading around $11 to $10. Even back here in August, around $11.15, and then back in the first week of October, trading around $11.14. Almost the exact same chart as SH, the one we were just looking at. And then the first week into October, guys, this one is trading well over $14 a share, up over $15 a share. And then, of course, at its peak volatility in December, this one was at $21.35. Almost have, close to a 100% return in just a couple of months right there. Now, obviously, most of us were not predicting the market to get this volatile, when it happened. And obviously, most people, most long-term investors just added to their long-term positions in these big dips, okay? I think you could easily squeeze a 40 to 60% gain if you would have been buying these shares, back in October. This is not traditionally how I would short a stock or how I would short, an index. As a matter of fact, I've never really even used this method before. I just want it to be aware to people, you can do this on a pretty limited budget, okay? So if you had $50 or $100, $11 a share is pretty affordable. Seems like it's in your wheelhouse. This is a way you could short the markets, and more specifically the NASDAQ index, if you had a feeling the markets were going to lose value. And so I don't think this video would be complete unless I showed you all a fund that shorts the Dow Jones Industrial Average. This one is ticker symbol DOG. So just remember that it is ticker symbol DOG. These are the ProShares short Dow 30, okay? Pretty much the exact same chart pattern as the other two we looked at. I got the 1 year chart pulled up, and you could have been buying these shares around $54 towards the start of October, and as you can see, they got up around $58, $59, and then, like I said, in the height of its volatility, around $65. So you could have made some money. Like I said, on a percentage basis, nowhere near as much as SQQQ because the price has gotten so low on that ETF. And to me, that's the real key, okay? You want to find the absolute most inexpensive, ETF shares to buy. I think that way you maximize the amount of profits you can make on these ETFs if you decide to trade this way. So if I was actually to use this method, I would go the SQQQ route, and I would also go through that list and find the cheapest ones I could find if I was predicting the indexes to crash or take a correction. But anyways, guys, that's all I got for today's video. I hope you enjoyed it. If you have any more questions or you'd like to add to this video, just drop that down in the comment section. Please drop a like on this video, and thank you so much for watching.